Let's have a great week, everybody. How's everyone doing? Give me Y if you could hear me clearly. Paulie said, Mark, it's dead as a graveyard. Hi, Marcio. Nice to meet you. Thank you, Stell. Ping Pong. Stephen Marshall, how are you? I'm not your boss, Marcio. I'm your partner. We're all partners here at ForexAnalytix because you're the captain of your own ship, just like everyone else. Paul, how you doing? Okay, so this has really been a chop fest, the dollar, but we're about to enter a moment of truth for the dollar. Thought that we were going to get one more wave to the downside, but I drew in this line last week, and this could be a shoulder if you believe that head and shoulders can happen midstream in a market. And I've had that debate with a lot of people, because I'm a Edwards and McGee guy, and they're normally reversal formations, and we all know the trend in the dollar has been up. But if we start cracking this line here, it's about 580, call it 170 from here, gives one of the fib targets that people have been talking about forever. Actually measures to 99.20, which would be a new high for the move if we get through here. A lot of people are going to stay with it. I'd say, stop hunts are here and here. And I'm going to start talking about, and this will be the grand prize, at least 5 buy stops above this high at 98.12. Okay, but a lot of people are going to, start getting out of the move from last week's highs. I know I would. So if you're going to fade it, you could fade it, but you have to get out of the way over 97.5. Everyone with me? Okay, so EG was successful last week, and we're getting a bounce. I'm actually a little surprised by the bounce, but I'll welcome it because I still think there are more downside targets left. Pretty good looking day, but we could have that neckline at 89.5, which is going to take it to 88.5. And when you look at it from 1 hour, we're about halfway back. Just like the dollar index, I wouldn't want to stay with this if we start doing better than the throw over again. Okay, and that's going to come in up here around 90, looks like 27-ish ballpark. So in my book, this is a rally to sell after this. I think they call it a 5-wave decline. So between here, I may put some more on at 14. Now, any calls, put out a sell at 50 on the third drive. So, I'm a believer in partial profits. Anyone that's been following me for a while and tightening up your stop. So if you want a loose stop, it's probably 90.30 or so. I don't think you have to wait to have a stop up here at 90.50, but I'm viewing this as a maybe a wave 2 or a B with a C to follow, and that's my amateur Elliott analysis. I'd be interested in seeing where Greg comes down on it. Okay, so metals are strong again, with silver outperforming massively, although it doesn't look like it wants to go right to new highs here. But gold is really dogging it, up 30 cents, silver up 1%. So a lot of people are going to wait for 1380 to be a buyer. If you looked at our research, 1380 is going to be a big buy zone. Are we going to go straight there? I don't know. I know what I'd do if we got one more high. Okay. You look at the daily, you have 1, you have 2, And short term, it wasn't bullish for it to break out over this double top and then give it back. So right now I see a 2 drive pretty glaring here. And the gold silver ratio is due for a correction, which means there's a possibility, even though it's not happening today, silver continues to outperform. But this has been one heck of a move, hasn't it? I remember saying, I think we'll look back at the 90s and say, why weren't we loading the boat with this trade if you could trade the CFD? So maybe between here and 86, we get a bounce. It's one heck of a move from 93.5. You're talking about 6, so why not 3 back? Maybe it turns tomorrow on turnaround Tuesday. Yen is pretty tough with the dollar being strong, but the only thing that gives me a little pause on the dollar is that the Swiss has been pretty weak during this phase of the dollar rally. Right here. I use Blake's stuff here. Pretty weak. Okay. So that tells me not to be aggressive. So I'm getting so many conflicting signals right here today. But this doesn't look like a bottom to me. And the yen's trying. Maybe this was a bottom, but you know, I didn't act down here. So I want to see how the yen acts on a pullback. And really, I think the market being in summer and everything else, I think a lot of things are just going to wait and chop around for a week into the Fed. So we'll see. Here are your yields. Now, although they've come off, it doesn't look terrible. You know, right now, so far, you know, we're still trading under this wedge. Here's the wedge in the 10-year. But it hasn't given up much ground. I don't know if we're going to revisit these lows before heading higher. I'd like to see it get back up here. And the big picture is, which I'm having a hard time converting myself, is to look for a breakout here into the Fed. I'd love to fade the Fed next week, especially if they get extreme and go a half. That would be really set up some nice shorting opportunities on anything that pops on something like that. And, you know, I think things will be popping like popcorn on a half a head and shoulders there. Okay. Don't fight the Fed, Joe says. Okay. I'm going to fight him, Joe. I knew a guy on the floor a long time ago. I think his name was Charlie Bregman, and they called him a bank. And that was the days during, you saw a lot of intervention in the currency markets, a lot of intervention, and he would fade it. Okay, so a believer that most interventions don't work. They called him the bank. So we'll see. Joe says not to fight the Fed. I know guys looking for 170. We'll see. If that's the case, then the yen's really going to decline dramatically. So in the meantime, you know, there are days where it's hard to come up with things. And you also tweeted that if you're a reversal type trader, you can't look for turning points every day. Sometimes not even every week. And if you can find them, if you found a couple a month, you do quite well. So you can't find them. One thing I do think that is kind of counter trend that has shaken out a lot of people that I'm going to attempt is going to be this. And we're not too far away. I'll attempt it tomorrow if we get down to the 78.6 level in Aussie Kiwi. All the 61.8 guys are gone. I'm going to bet that we hold and get something like this before we take out the low. So if we have equality from 103, could still take you up to new highs, 108 level. So looking at Aussie Kiwi sometime this week, we're almost there. We're only, you know, 22 pips away from 78.6. So that's something for you to put on your watch list. I'm not sure if Blake's going to be able to join us. Why you paired US dollar with Japanese yen? Why not euro or GBP? Oh, we'll cover them all for you, Gaurav. Okay. We have the best team on the net, and Steve usually does like almost a complete rundown. I trade it. I was actually surprised because coming into today, before today, the pound had a stronger structure. Okay, now it doesn't. So, well, here's the day, but shorter term, before this, look how much better the pound was holding up. And it still is. So, you know, we'll see. I think the structure is still better on cable despite more cable weakness. Let me just be an optometrist, okay? Okay, what looks stronger? Something that's probably holding a 50% retracement, or something that's scratching major support already? So when you look at the two, here I'm your eye doctor, which is stronger, this or this? This or this? Which can you see a clearer bullish case? Anyone? So the euro, we're almost back at these lows. Look at this low right here. And look at this low right here. So deeper retracement in euro means weaker to me. Almost at the lows, retrace. So that's right, Nembu. So I'm saying I agree. Okay, thank you, Stalin. Does Hitler agree with you? How about Kim Jong-un? Stalin. Ziggy, if you're cross-eyed, turn off your platform. Okay. So Blake, I know you're in the boonies of Wisconsin. I used to spend a lot of time in Wisconsin. You're going to Madison. I was there once for a Grateful Dead concert that I don't remember. So I'm not sure if you're going to be joining us, or Steve, are you on deck here?
Of course I am.
You're on deck?
Yeah, I am.
Okay, what kind of bat? How big is it? I won't say that because you'll turn it into something vulva-ish. I was going to ask you, you know,
It is very
how,
very likely. Yes.
okay, so instead of how big it is, how heavy of a bat do you use? You know,
A lot of answers come to mind. None of them.
Hope you had a good weekend, buddy. It stopped. The aftershocks stopped there in Greece.
Yeah, we had a few
Yeah.
aftershock earthquakes.
Yeah.
Just one of them was like
Okay.
somewhat.
We're brothers in ground shaking, Greece and California. So, what do you think, Steve? You know, kind of a summer type market. To me, it feels like we're already prepping for the Fed.
Yeah, it is extremely boring, and one of the reasons it's boring is because the market obviously is very tough to move, liquidity is low, and everybody is expecting the ECB on Thursday.
Oh, okay.
And most importantly, the Fed at the 31st of the month.
Yeah. Okay.
So
people don't want to make big commitments.
Yeah, they
kind
don't
of
want
book squaring environment for a week.
Yeah, they don't want to make big commitments ahead of that because we know that the ECB can move the market. Now, I would expect that to be quite a big event. If it wasn't for the Fed being a few days after that, and knowing that the Fed is a few days after that, I think that the market's reaction to the ECB, unless we get like big fireworks, is going to be rather limited, muted, or short-lived. Because immediately after the ECB is over, all focus is going to be on the Fed, because we know that the Fed is holding the baton having to do with the global monetary policy.
Is this going to be one of the last or next to last meeting that Draghi heads up before Lagarde takes over to reorganize Europe?
If I'm not mistaken, I think that officially Draghi's tenure ends at the end of October. Yeah.
Okay. All right. So he's got a few months left
Yeah.
to think he'll do whatever it takes.
Stelio, am I mistaken on that?
I think you're right. But,
Yeah.
So,
hey, Stel.
Yeah. Hey.
How are you, buddy?
I'm very well. How are you?
I'm good. So pound weaker than euro today. Any news behind that? I'll take Steve's question.
Well, it's we have the end of the voting for the Conservative leadership today. The next Prime Minister is announced tomorrow, and that person will take place in number 10 Downing Street on Wednesday.
Is there any chance that that's not going to be Boris?
Well, that's what I was going to say. It seems almost certain that it's going to be Boris Johnson, and that's what the markets don't like, because Hunt had been gaining some ground originally, like a couple of weeks ago, but it seems that it's going to be Boris Johnson. And there have been quite a few people talking about Johnson. He was foreign secretary, and when he left, people who were working for him, they've started saying comments that, oh my God, when he left, it was relief. It was, I mean, I don't know him personally, but it seems that like he's a very odd person and very unpredictable, let's say. So I think that's the market's realizing Boris Johnson is going to be prime minister as of Wednesday, and what happens next.
Yeah. So, speaking of which, we might indeed have a few interesting days ahead having to do with the pound, because obviously we get a new prime minister. We should get some statements rather soon, within the first few days, that are going to shed some light in, what kind of a direction he's thinking of taking, having to do with Brexit, because it's a different thing of what you say before you take the place, before you take the position. And obviously, it's a lot different it matters a lot more what you say once you have the position and you are in power.
Screen, Steve?
No, I haven't yet, because
I just wanted to, I just noticed, I saw it Friday. That was pretty ugly close in the S&Ps on Friday. Did it mean anything to you, Sells, and taking out 2960?
You said it yourself. It doesn't mean much.
Yeah, okay.
It doesn't mean much. Yeah, there is a decent chance that we're going to pull back from here, but as I wrote in the weekend analysis as well, and that's why I didn't mention it in the video, there's nothing, besides the ascending wedge break, which we already know that it has happened several days ago. Unless we break below 2960, there is no other technical event we can speak about. So let's take 2960 out of the way, and once we do that, then we open the door for a full retracement of the wedge, which would point to a move towards 2910. So like another 50 handles to the downside. So Stelio, we have plenty of time today, with Blake being absent. Anything else having to do with the UK, Boris Johnson?
Well, not with the UK. I mean, there's nothing yet. We'll have obviously the result tomorrow. There's oil has been a little bit volatile due to the situation in Iran. For people who don't know, Iran seized the British tanker a couple of days ago, was it? But we're going to wait to see. There's going to be a statement today. Is it today? I think later today. Yeah, from Prime Minister May. And the situation is complicated. We're talking about this in the chat room earlier. It's complicated, and Iran is not is not a country to mess with, right? Because they have they're quite powerful, and they've shown in the past that they too can be quite unpredictable in the way they act, and the world has been divided into two camps basically. You have the Americans, the British, the West basically on one side, and you have the opposing side. So let's see what's going to happen with that. We'll wait for the statement, but oil has been pretty you see pretty volatile in the last few days because of what's happening. I still think this story tells me that we should be buying dips in oil because
it definitely makes sense against 54.75. As we've said, it's a strong area of support. So yeah, against that support level from a technical perspective as well, it would make sense, but a break below that area, and I would definitely turn bearish, at least in the medium term. Yes, we can see it here. It has been rather choppy lately, so it's not as easy to read, but against this confluence of supports here, 54.57 to 54.75, quite a nice area of support so far. Crude is respecting it. Keep in mind though that we have the confluence of the 50 and the 200 daily moving average working as resistance at 57.30. So I would be paying close attention of what happens between these two areas. I think once we break above or below the equivalent one, we should see a continuation and get crude unstuck and moving in one direction or the other.
Yeah.
What else?
There wasn't really that much over the weekend. The main thing that concerns me is still the Fed and what they're going to do next week. And we talked about it on Friday on the webinar.
Speaking of which, what is exactly the market pricing in as we speak? I know it is pricing more than 25 base points, but
let me check
how much?
Funds, hold on. It's over 50% chance of a 50. So it's
over 50 over 50, yeah.
It's roughly 30 basis points. Actually, hold on. We're pricing okay, July 9760. Yeah, it's let's call it roughly 50%. I mean, we can go to Bloomberg to get the exact.
So roughly 50% of a 50 base points. I would actually fade that.
Yes, you remember we were talking about this.
I would actually. I think it's going to be very, very hard. I mean, nothing is impossible, but I think it's going to be very hard for them with current circumstances to excuse an immediate 50 base points cut. I think there is also a big chance that if they do that, they might produce a different result than what they're expecting. I think the markets might actually perceive this as some sign of a distress based on evidence or data that the market is unaware of at the moment.
Yeah,
because with recent data being rather stable, having to do with the U.S. economy, U.S. stock indices being almost at all-time highs again. I mean, we're just barely off the highs. Such a rush to cut 50 basis points would seem rather a weird move, eh?
Yes, I think it's not warranted to cut 50. Actually, in some ways, if you think about it, it should be not a given that they even cut 25, given on economic data. But
theoretically speaking, yes, but you know how it is.
Yeah, they're never going to shock the market now.
Yeah. The Fed has induced the market in following the quotes logic of the Fed. And what is happening is that the market is looking forward to what they think the Fed will be doing. Then the Fed is trying to follow what the market is pricing in, good or bad. An example of that is the December rate hike, right? Which we know with what followed that they had obviously already regretted making the market price it in. But once the market had priced it in, they did it anyhow. So I have no doubt that they're going to cut 25 because the market is more than fully pricing it in at the moment. Like it or not, they, in essence, they're now committed to it. But I think that they can easily escape doing a 50 because the market is not fully pricing it in.
Yeah, I was thinking about what Dale said before about, if they cut 50, it's going to be a good opportunity to fade it. And I'm torn. I think that if they cut 50, either they know something that we don't, and it's bad, for the U.S. economy, or it shows that they're basically changed completely their I don't know what the word is, but their mentality towards how things should go forward. And that would tell me personally, if they cut 50, that tells me that they're gonna go a lot more.
Oh yeah, of course.
Because you know the market's pricing after this one, July. Let's see, August is 97.90, September 90. So it's pricing another 2.5 cuts for the next until the end of next year. If they go 50 now, I think 2.5 is way too little. I think they're gonna go. There must be a good reason for it, and they're gonna go just like they went in 2008. I remember I was there. I was a market making in dollar swaps then, and I could see what was happening, and it was just going faster than the market was expecting all the time. So I'm conflicted. I don't think. Maybe the knee-jerk reaction would be to fade the dollar a little bit if they cut 50, but I think going forward after that, they probably would outpace what the market is expecting.
Now,
so,
in my opinion, although, and I wanted your input as well, since we have quite a lot of time to both discuss and show other charts. I don't like to make predictions, although I do like to fade what the market expects when I think that what the market expects is has a big probability of being wrong. So when the market is overpricing something, I would easily fade it because there is an obvious risk reward there. But considering the fact that I don't think the ECB wants to stay behind in this easing cycle for obvious reasons, and given the fact that we both just agreed that there is a big chance that the Fed is going to disappoint the market that is more or less half expecting a 50 base points cut. I think given a nice dovish forward guidance on what they're going to do in the months ahead from the ECB and the Fed cutting 25, it's probably a decent chance that we're going to see a continuation higher for the dollar. And speaking of the dollar, even if we have a look at the DXY, we had this discussion last week as well. Despite all that's been happening, the market, coming from having to price in rate hikes to rate cuts, the DXY is holding up very, very nicely. And in fact, this consolidation for the time being definitely doesn't look bearish to me. So imagine getting Draghi, stepping on the putting the pedal to the metal on dovish forward guidance, that should create some downside pressure for the Euro USD, which immediately is going to translate in a breakout here for the DXY. And if the Fed then follows with a 25 base points cut, then I think we could easily see the DXY trading to multi-year highs above the previous high at 98.37. What do you think, Sergio?
Well, the ECB certainly has a reason to be dovish because inflation is well below 2%. I think the last print was 1.3, up from 1.2. But
oppositely from what's happening in the US, yes, indeed.
Yeah. And even though employment is still unemployment in the Eurozone actually 7.7 or something like that, it's still high because of the southern countries.
Which is literally more than double.
Yeah, the US.
The US one. Yeah.
The ECB certainly has a reason to be dovish and to want to pursue a more accommodative monetary policy. The question is, what do they do? Do they go to negative rates? They're already at zero. They missed the chance for sure to get any kind of rate hikes.
I think the ECB is already out of tools having to do with rates. I mean, will it make much of a difference if minus 0.4 becomes like minus 0.6? I doubt it. No. So I think that whatever is coming next is going to have to be combination of quantitative easing and likely new weapons in the arsenal.
asset purchases like the Bank of Japan, they start buying equities.
Yeah, equities buying, perhaps some generalized, although not yet. I think one of the reasons I think that they're bringing Lagarde on board is exactly the fact that she's a lawyer. I mean, mostly her work as an IMF head, etc., has been to broker different type of deals. You know what I mean? So it's not mostly about perfectly tweaking monetary policy, but it is like looking at the bigger picture. So who knows? I don't know. Universal basic income.
She specializes in countries being bankrupt.
Yeah, helicopter money. Who knows what we?
You know what? Any excuse to get the stock markets higher. That's the bottom line, right? Because if they start doing asset purchases, bonds. Well, the ECB has bought pretty much every European bond in existence now. I'm joking, but you know what I mean. And if they start buying other assets like equity ETFs, like the Bank of Japan is doing, or S&B or whatever they do. Where are stocks going? They're going to rocket up, with zero rates.
The moment, first of all, the moment they announce something like that, as you know, everybody's going to jump on board trying to front run them, right? So we're going to have a huge rally just because market participants are going to be all over the place trying to buy everything that the ECB is going to be buying later on.
Yeah, it's... let's see how that's going to pan out.
Let me pose a question to you two guys. Marty Zweig, Joe brought it up when I was talking. He coined the phrase, "Don't fight the Fed." Okay, yep. So is it possible now that the Fed, whether they want to admit it or not, has become pretty politicized, that there's a time, just like you're talking about the ECB, where their tools, they don't have as many tools besides just coming into the markets and buying stocks? And I'm already hearing that the Fed is already intervening with S&Ps, but
we know that that's not.
Yeah, right. So maybe there's going to be a time where we can fight the Fed. What do you think? And when?
Oh, there's no question about it. There will. The general, adage that goes like "Don't fight the Fed" is correct. Meaning, the vast majority of the time, a central bank pushes monetary policy in a specific direction, it succeeds in achieving what it wants to achieve. But as we know, there comes a point in time that
pushing on a string.
Yeah, that after having thrown even the sink, it's not enough to maintain a situation, to maintain economic expansion. So when that happens, then you have the opposite effect, which is the following. Now that everybody knows that things are blowing up despite the central bank being all in, whenever that happens, then everybody's more panicked about what is about to follow. Because once you see that the game is getting lost despite all the efforts of the central bank, then the panic that ensues is much, much larger than it would be if you had a regular expansion that wasn't so much forced, that wasn't so much supported on easy money and monetary policy, and then things went wrong. Because in such a case, which should have been a normal recession in a normal business cycle, then market participants would know that a central bank that behaves in a healthy manner has ways to make the recession softer, make the landing softer. But once central banks went into the game to support the expansion from day one to day whatever, when the recession time comes and you know that the central bank is already all in, what can it do to support the recession later on? It's a big question mark. Yeah, they will always be coming up with new tools and new methods, but will it work? Will it suffice? It's a bet. It's a big bet. And as you know, market, especially when it's under turmoil, doesn't like bets, right?
Yeah, very interesting. Actually, I was just reading on a tweet on Twitter that said that the last proper cutting cycles in the US all started with the 50, and 1995, 1998, which were only a couple of cuts from what I remember. They were just 25s, and they were basically what people call insurance cuts. So we have to ask ourselves, what does the Fed think? Is this an insurance cut, or is it the start of something big?
Speaking of which, Stelio, it's a good thing to remind people, how did that work the previous times? Every single time that we've had in the recent past that can come to memory, the Fed cutting rates, things went south almost immediately afterwards, right? I mean, once this last part of the cycle began, it was a matter of time before things went really, really south. Because usually, as it has been proven in the past, the Fed is very late to react, and when it actually reacts, it's already like the beginning of the end. So I would definitely not be trying to fade the initial reaction like immediately, but keep in mind that it might take up to a few months. But usually when you get rate cuts started, within a few months, the downturn has really, really begun, and things are out of control for at least half a year to a year, right?
Yeah.
Okay. Anything else, Taylor, before we go to the charts? Note that the load is moving.
Yeah.
I would just like to ask Greg Kitchen, are you the Greg with Oxford Economics? Can you please let me know if you are? I sent you a message.
Okay.
Okay, go ahead, guys.
Steve, no, I'm pretty much done. I mean, it's been a pretty quiet weekend anyway. So
yeah, it has been indeed. Okay.
Actually, there's a couple of things moving, like silver again. So you have a goal start to see.
Silver found support immediately in this horizontal support resistance area. This is the one I was anyhow looking on my chart at the moment. As you see, there is this descending trend line resistance, which I was monitoring. We got rejected from there on Friday, but we found support at $16. $16 has been strong support resistance area in the past, and now we're retesting this descending trend line resistance once again. Obviously, if we break above that, this opens quite a lot of upside, even for a move towards $17.50. Needless to say, Dale showed this. We have shown this since like a couple of weeks ago, at least. On occasion, we always look at it. Gold silver ratio, once it turned lower, it has been literally relentless. I mean, we went from like 93.5 almost to 87 within like 5 trading days. Yeah, like it's amazing. And keep in mind that if this is like a larger type of reversal, because don't forget that what we got in hand here is like a very long-term ascending wedge.
Yeah.
We overthrew that ascending wedge, which is,
classic.
It's rather frequent when you have such a strong ascending wedge.
I've never seen more throwovers on my charts. I mean, and completely unrelated instruments. I've seen a lot of them lately, Steve.
Yeah, on occasion, you get charts all over the board, more or less forming the same kind of pattern, right?
That's pretty cool. I like when that happens. It's kind of a message, like every instrument's a wedge, or you see a lot of cup and handles everywhere, and so I'm seeing a lot of throwovers.
So imagine if this is the real deal here. Yeah. How much lower
40
the gold silver ratio can move to, right?
And that's average for the last 30 years, 40, 50.
It can easily go back and retest this low at 65.50, right?
Yeah.
Which is like a huge distance from where we currently are.
Yeah.
Also keep in mind, and I think we're going to know if that's the case or not, since we have the two biggest central banks coming out within the next like 9 days. Keep in mind that usually whenever we have a clear overperformance of silver over gold, in general, the metals are doing well.
Steve, add also to that the fact that the actual ratio of the physical gold and silver in existence is under 20-1.
Yeah, and we had gone almost to 93.5-1 ounces of silver to get one of gold, which is, completely out of context, considering what you just said, Stelio. What is the ratio between?
It's not necessary that it should be there all the time, but
but it shouldn't be that far away, right?
Yeah.
Because scarcity does matter. Scarcity does play a role, but don't do the mistake that people that love cryptocurrencies do. As I was explaining the other day, scarcity is an important factor having to do with price. Only when what is scarce has actual value, because scarcity of things that don't have value doesn't matter, right? But we do know that gold has value. It has intrinsic value. It has many usages. We do know that silver has value. It has intrinsic value because it has many usages. Even if for some reason you couldn't exchange gold or silver starting tomorrow with dollars or whatever currency, you would still be able to do several things with them. They would still have actual worth. Okay. So scarcity does play a role when you have in hand something that does have real value. Okay, so that is what I had to say with gold-silver ratio. So keep an eye on silver. If silver breaks above this trend line, then I think it should extend higher. I know that it's already overextended. I know that a lot of people are coming out showing that the readings for gold and silver have started reaching extreme. But keep in mind a couple of things. First of all, usually you do see extreme readings whenever you have a strong trend. Okay, so on occasion they can signal like a pullback or whatever, but this is usually, in looking at the big picture, this is usually confirmation of the direction of the trend. Also, keep in mind that gold is backtesting today previous area of resistance and support. So let's see what's going to happen from here, because if we hold above this horizontal support area, I think that we could easily extend at least towards like the 161.8% extension of this triangle, which comes at 1,475, roughly, just a few cents below that. So I know that we had quite a nice reversal from the 127% extension on Friday, but I don't think you should be going out there and shorting gold just because of that. Okay, especially with silver looking that strong. I mean, it's not going to happen for many days that you're going to be seeing, for example, silver being up on the day and gold being down on the day. I mean, they should more or less follow the same path. Yes, on occasion, one of them overperforms the other, but that doesn't mean that one is going to be going down and the other one is going to be going up at the same time. That can happen on occasion, on a rare occasion, but nothing more than that. Now, having to do with copper, keep an eye on this. I'm looking at this rectangle. Friday, we had like some very bullish price action taking place here. But look at the daily candle. I mean, by the end of the day, we had retraced the vast majority of the gains. We closed again back within this rectangle. And despite opening higher yesterday, we got rejected once again. So bottom line, copper is currently on this rectangle of resistance. So far, it seems quite hard to crack. Just a bit higher, we find the 200 daily moving average at 277. So I would be a little bit careful here with copper. Not an easy market to read lately. Just look at this. I mean, with the exception of this consolidation above resistance, copper in general has been confounded since the beginning of July 2018 within this larger rectangle. We broke above it for a short period of time, we consolidated, and now we're back again. And we're actually trading within a rectangle, within a smaller rectangle, within this larger one. So bottom line, as you see, copper has been lacking trend for quite some time, okay? And that is the big picture that you have to keep in mind. Now, palladium is still pulling back, but so far the manner with which it's doing so is not impulsive. So I wouldn't be surprised if it sooner rather than later catches a bid once again. And having to do with platinum, platinum has been appreciating within a little channel, but nothing really bullish with it yet. Keep in mind, though, that if for platinum you want to have the big picture in mind, and for whenever that proves to be relevant, I'm monitoring this long-term descending trend line, which isn't passing anywhere close yet. But at some point, I think that platinum, after being severely beaten for years, I think that at some point it's going to catch a bid. And when that happens, I think that platinum is going to have a lot more upside, but we're not there yet. Just wanted to share the long-term picture as well. Now, having to do with the most popular currency pairs, I want to start with the Aussie and the Kiwi. Starting with the Aussie, first of all, as you see, the Aussie did pull back, but unsurprisingly, it found support at previous resistance. So as long as we remain above this 70-30 area, I think that a continuation higher looks likely. Don't forget that we've already triggered this inverted head and shoulders formation. Besides having broken above like confluence of resistances, we've now triggered this inverted head and shoulders resistance, and the continuation higher, even if it just went for the completion of the target of this inverted head and shoulders formation, should take us back at 72.50. So Aussie looks rather healthy for the time being. Same with the Kiwi. Kiwi was already overperforming. Kiwi had already broken above the 67.10 area, which was the confluence of resistances before the Aussie did. And it looks well bid. Why not a full retracement of this wedge towards 69.40? Might take a few days, but it looks like a likely scenario. I know that coach visited before the Aussie Kiwi. Aussie Kiwi is still consolidating within this descending channel. I'm really not convinced that the Aussie Kiwi is going directly lower from here, simply because whenever I compare this rebound higher from this breakout, from this descending wedge, and this move lower, which has been, rather slow and overlapping, I find it hard to believe that we're going to just accelerate lower without seeing one more leg higher. Nothing is impossible, of course. Regardless, I have this confluence of supports here at 137.50. So from a risk reward perspective,
yeah, I like it.
It would make sense buying the Aussie Kiwi, looking for at least a decent rebound.
Yeah,
higher.
Grega last week, Steve said he wasn't long-term bullish, but he thought we could get one more push to 108, and then he's looking for sharply lower levels.
Yeah, it is very likely
Yeah.
to get one more leg higher towards 108, 108.50. I agree.
Yeah. So
100%.
I think it's a shot down here at 78.6. The only other scenario would be it takes out that low for an irregular B, and then we get the rally. I mean, that's a possibility too. But,
Yes.
you got to try. You know what I like about 78.6? It shakes out all the 61.8 and 50% retrace people. They're gone.
Yeah,
They're
that
not
is true.
trading those deep fib numbers.
That is true. Another pair that I like very much for several reasons, not just one, is the Aussie yen. Now, why do I like it for several reasons? One reason is because it has broken above a descending wedge. Another reason is because after it broke above this descending wedge, we saw a few days of rather good strength, then a consolidation, what is likely a pennant, and it has likely resumed the upside. Now, it's facing horizontal resistance area roughly here at 76.30, a break above which would also trigger, I haven't marked it here, but I will mark it now for you. I think it's very easy for you to distinguish. Let me find a nice color. A nice inverted head and shoulders formation, right?
Yeah.
Here's
And
the
that
neckline.
implies the S&Ps aren't done either if we're heading up to 78, 79.
Yeah, it is very likely. I mean, taking into consideration correlations, although I have to admit that there's been a decent amount of time that we've seen these correlations breaking down, so I would pay less attention to them currently than at other points in the past. Anyhow, Aussie yen at a nice resistance area at the moment. My intuition tells me that we're probably breaking above this resistance area, and once that happens, I think that we should be looking for an extension higher. The distance from this head, which is roughly at 74, as you see, to the neckline, which is roughly at 76.30, is 230 pips. That would obviously point to an equivalent extension, which would take us roughly towards that horizontal resistance area there. Not a bad move to be looking forward to, right?
Yeah, I use Head and Shoulders shampoo when I see a lot of those formations developing. How about you, Stel?
Stelios never bathes.
Yeah.
Bald
people,
what?
bald
Hey,
people
Stel,
don't
what
use
kind of
shampoo.
shampoo do you use so I know not to use it?
The type of bald people.
Yeah.
All right, just get the.
Stelios is lucky. He's saving money because he only needs body shower.
Oh, you're handsome like Yul Brenner, man. I don't know if we have a guest today, guys.
Who does?
Us. I'm not sure we have one today.
Okay, it's okay. If we don't, then
I'm hunting. I'm not Forex Stomp Hunter. I'm Face Guest Hunter this morning. Okay.
okay.
I'll find the guy.
Speaking
I'm gonna
of
put
which,
him in cuffs now.
speaking of which, because I have more to talk about.
Oh, what a
Kiwi,
surprise! Hey,
yeah.
hey, are you surprised, Stel, that
Unbelievable.
Bulba?
Never happened before. Never happened before.
He's not just surprised. He's genuinely shocked.
All right, Steve.
So
go ahead.
if you remember when we had that pennant here, I was looking for an extension higher towards the confluence 61.8, 200 DMA. As you see, the Kiwi yen has already been following that path. So Kiwi yen looks good as well. Now, there is something interesting having to do with the pound, and I wanted to show that. We likely, but who knows what the odds are, at least, it's a formation that has tightened a lot. So, we're going to know rather soon. We have a descending wedge here for the cable, and at the same time, we have a descending wedge for the guppy, right? So it's rather interesting because it might end up that both of them are going to be breaking higher if for some reason, following whatever statement we hear from Boris Johnson tomorrow, if for some reason he produces something that is found positive, we might see a nice breakout from both those wedges, both for the cable and the guppy, and that would probably produce some continuation higher. Also, if that's the case, if that's what we end up getting with, that is also going to produce a nice continuation higher for the euro pound. The euro pound has broken below this ascending wedge, but so far it has failed to break below the first horizontal support area that we have at 89.60. So 89.60 still remains the key level for us to see like a, some type of a corrective move unfolding. And it's not unlikely that tomorrow we will see Euro Pound, the cable, and the Gappy all making some nice technical moves at the same time. So I will definitely be focusing on that, having to do with what to expect tomorrow. And since it's an event that is unrelated to what we're expecting having to do with the ECB and the Fed, it is likely that the market is going to follow through with that, irrespective of the fact that it will probably remain on hold, having to do with the rest. Okay. Now, what's there? Oh yeah, one more thing that I wanted to show, and that's the USD CAD. I also mentioned it yesterday on the video. Keep in mind that the USD CAD, oppositely from what the rest of the commodity currencies are doing against the dollar, is holding up very nicely. Probably not coincidentally, since I've stressed out many times the importance of this confluence of supports at 130, and it's currently attempting to break above this descending wedge. So if for some reason we are to see some dollar strength against commodity currencies, first choice is by far playing that through the USD CAD. Okay, the risk reward is still extremely appealing against the lows. We can easily see a rebound towards 132.50, and that's like 170 pips higher, while the previous low is like 60 pips lower. Okay, so the risk reward is still comfortably there. Let me go through your questions now. Steve, could you mention Aussie CAD and Kiwi CAD? Yes, of course. Actually, it's very related to what I was just saying, because if you paid close attention, I made it quite clear that the Aussie and the Kiwi have been overperforming the CAD during the past few days. And voila, you see the Aussie CAD is breaking above this descending channel. Most importantly, don't forget that the Aussie CAD found once again support at this trend line support that dates back to 2013. So that was like the fifth retest of a trend line that dates back to 2013, and we're currently breaking higher. So I have to admit that the Aussie CAD looks rather nice for an attempt to follow it higher, not as nice as the Kiwi CAD does, which is breaking above a descending wedge. We saw that the other day. Breaking above a descending wedge, while we had very clearly indicated RSI divergence on the daily. So both the Aussie and the Kiwi CAD look nice for a continuation higher for at least a period of time. Very nice, very healthy rebound here. We went all the way from 86.20 to 80.70, 250 pips within like a few days. If you take into consideration that in this currency pair we have two quite similar currencies, one against the other, not a bad move to talk about, right? I usually refrain from trading such crosses simply because they usually don't move fast in any direction. But I think under the current circumstances, they look okay. They look appealing. Thoughts on why NZD is destroying all crosses? Did something change fundamentally? Stelio, that's for you, bro.
What was the question?
Any fundamental reason for the Kiwis' overperformance in comparison to the vast majority of other currencies out there?
Not that I can see. I mean, the Kiwi had been underperforming for a while, right? So it was a kind of a logical reaction. I don't see anything having changed in the fundamentals of the Kiwi of New Zealand. I've always said that I think the government, it's not a new government anymore. They've been in place for a year now. Is for me is the main issue for New Zealand. The government is a left.
Socialist.
It's a socialist government, and we know how that is. It's not necessarily a bad thing, but in terms of fiscal policy and by extension the currency, I cannot treat this as being positive for the Kiwi. End of story. So that's the thing that's driving for me the currency, and that's why it's one of the currencies that I'm actually bearish on. So, but yeah, to answer the question, I don't see anything that has changed in the last few days or weeks.
Okay, bro, thanks. Now, we have a couple of more questions that I want to cover and one more pair that I want to show that I forgot. I wanted to show anyhow and I forgot about it. Euro yen seems to be breaking up below this triangle. So, you know, there's no confirmation yet because we hadn't broken below the previous low. But if I see an acceleration from here, I'm going to like to see a retest of this spike low at 118.20 something. I also wanted to show the Euro Swiss because the Euro Swiss has broken below this channel. We came back, we retested it, and keep in mind that the Euro Swiss is now approaching the next horizontal support area at just below 110, like 1098. So keep in mind on this area, as you see, we've now been, after testing 120, after back testing in essence the previous floor at 120, we've been in a prolonged downtrend. It's not moving anywhere fast, but it is definitely moving lower. Now, of course, if you want to be buying support levels, at least you know that you have the S&P having your back, okay? But, you know, you also need to respect the fact that since April 2018, with periods of consolidation, the Euro Swiss has been slowly depreciating lower. Now, one more question I had, and this had to do with the pound Swiss. I haven't had a look for quite some time. The pound Swiss, which as you see is currently retesting key area of support. So, you know, huge move from 134 down to 122, quite impulsive in nature. But would I be selling after such a huge move lower, after like 1,200 pips to the downside, and while testing horizontal support area that dates back to 2016, would I be selling the pair here? Absolutely not. So if you like it from a risk reward perspective, you know, buying it here for a rebound makes sense. Having said that, keep in mind that, as I said, it's depreciating in an impulsive manner. So even a rebound is not going to be enough to turn it bullish. It's just going to be probably like a corrective rebound. So we might get something like this. Okay. Anyhow, the pound Swiss remains under pressure. This is also one pair that might produce from a key technical level a nice reaction tomorrow, assuming that we're going to have something positive coming from the mouth of Boris Johnson. Notice also the clear RSI divergence that we've had, the daily chart. Okay. Okay. One last question that came in. Pound Aussie, coach, are we still without a guest?
Well, let me see. Greg from Oxford Economics, are you here? Yes, I think we are. Because Gregorio Siciliano, I don't think is with Oxford. He's the only Greg I have up here now. So
okay,
I'd say no.
Okay, so Pound Aussie. Clearly, in my mind, a bearish consolidation here until proven otherwise. We stalled initially at this green area you see here. What does this represent? That represented the equality target from this first leg lower to this second leg lower. In essence, the target of this bear flag, the red one. Okay, but it looks to me like Pound Aussie wants to continue lower irrespective of that. Okay, so against 178, I would still be looking lower. Okay. Anyhow, I'll be on the chat room for the rest of the day. I've minimized my meetings and all that having to do with development these days since Blake is out. So whatever else you need, if you're ForexAnalytix members, you know where to find me. And the rest of us, minus Blake, which is going to be on and off these days. So thank you very much, Coach, and we'll be back tomorrow.
Okay, remember, don't just count your pips, count your blessings. So let's see, I count quite a few. In fact, the whole ForexAnalytix team. And you know what, you guys too. And if FACE is helping you, the way to say thank you to us is to subscribe. And that's a wrap. You're welcome, DJ. Everyone have a great day. Remember the difference between pros and amateurs. Our pros know how to lose, so they have money left to be right with. So start building up your war chest. I think there's going to be some real nice trades set up after we get the Fed out of the way. Thank you, Harjo. You're best team out there. You know, I've been around for a few years, so I may not be subjective, but I've had a lot of experience, and I'd say you're 100% spot on. And that's a wrap. See everyone for Turnaround Tuesday. I think there could be some scalping opportunities tomorrow, so tune in, and we'll see everyone tomorrow. Enjoy the rest of your day. It's scorching here in San Diego, so if it's scorching in San Diego, a lot of parts in the country that's going to be hot. Stay out of the desert. Blake's lucky to be in 80-degree, humid Midwest weather today because he could fry an egg on the roof of his new house in Scottsdale today. So everyone, have a good one. Thank you for hanging out with us, and we'll see everyone tomorrow. Adios.